we have Amit Kumar Gupta joining us this morning to give us a sense of what's really going on the Lal Street. Amit, good morning. Thank you for joining us here on News 9. Help us understand, we are not seeing too much convergence when we talk about the IT sector, with Nasdaq and with Nvidia and other IT shares in the US closing higher. We are seeing that the reaction on India's IT pack seems a little mixed this morning.
Good morning, Kartik. Thank you for having me. So I think Nifty ID pack is mostly into the services sector, which has nothing to do with the really Nvidia or other these players in the AI theme. So that's why we'll keep on seeing this divergence. Sometimes a positive news comes stock wise. So here the Nifty ID pack remains on a bullish mood, but overall I think we continue to maintain our underweight stance in the IT sector. We think that there will be a slowdown in the overall IT spending in the US market, especially given the macros currently. And there will be probably a delay in the discretionary spending also, which may pose a downgrade risk in the upcoming quarters for the IT sector.
All right, and let's move on now from the IT sector to something which was expected to directly impact India's exports, and that is the steel and aluminium sector. But this morning again, we are seeing that that stocks of JSW Steel, Tata Steel, and Hindalco are both a little in the positive territory, and that seems a little counterintuitive, doesn't it, Amit? Given the fact that Trump has gone ahead and signed the order to increase tariffs on steel imports from 25% to 50%.
So I don't know how much seriously we should take these 25% and 50% levels.
Okay.
A few days ago, it was at 10%, then it was increased to 25%, and 3 days later it is increased to 50%. So I think these are negotiation tactics. These are not tariffs which are implemented. In fact, this doubling of 25 to 50 is, they have a negotiation time period till 9th of July. These are not applicable immediately. Moreover, we also need to understand that just because the tariffs go up, the manufacturing does not pick up in US. Eventually, the companies need to decide to whether to put the plant or not. And given the uncertainty, I don't think there will be too many buyers of that theory. In fact, if you go back, in the Trump's last term, the 2018-19 steel tariffs actually caused much more job losses in the manufacturing sectors. So this time, I don't think doubling the steel tariffs would actually help the US in some way. But that's how the political negotiations are going. Not really paying too much attention till 9th of July, when we'll have much more clarity about what exactly is the tariff levels, and it is which countries are exempted in these tariffs. Also the UK is exempted, Canada may also be exempted,
Right.
India may also negotiate. So we don't really know what is going to be the final tariff levels.
Okay, but Wall Street for some reason seems to be very bullish on a trade agreement between US and China being reached and being met sometime soon. How fragile do you think that agreement will be, even if it does go through? Because again, there is disagreement on both the sides, on especially on IT chips that China is in complete need of for its own AI development, and that is something that US is not relenting on.
Yeah, I mean, these are negotiations. The Trump style has been to escalate and then de-escalate and then get on the negotiation board, and then to finalize what is going to be the level. The chips and the semiconductors value chain is very critical from the China side, so I think there will be some compromise on that without really hurting each other's economy. But I think that is going to probably take well over a month before we can actually see that. But market can react on a daily basis based on the news flow, whether it is positive or negative. But there are some good signs, recently, that China and US wants to get on the negotiation table and discuss these nitty-gritties on the tariff wars.
All right. I also want to now bring you on board with what's really happening with Ola Electric and get your view on that. I mean, we've seen another massive drop in Ola Electric's share price yesterday, Amit, and this is a stock which again has been under pressure all year long. In fact, it's lost about 42% of its value this year. And again, yesterday we saw that Ola Electric had closed about 8% or so lower after Hyundai and Kia both did block deals and sold shares worth what we're reading is about 690 crore rupees or so. Where do you see investors invested in Ola Electric going from here? What should one do with that particular stock?
As a disclosure, we have never invested in Ola, and we
Okay.
don't plan to, invest in Ola.
Okay.
So my sense is that the cash flows are, there are no certainty of cash flows. There is a lot of noise being made about being the Tesla of India, but you have to just do a little bit of scuttlebutt, talking to people who have actually bought Ola scooters, and you'll see a amount of dissatisfaction happening. I think few months ago also there was a lot of hue and cry about the services being provided. And my sense is, when a brand is building up, then these kind of things can really hit the progress of the company. The recent fall is more got to do with the bulk deal where Hyundai Motors and Kia, I think, which were invested for quite some time. They had a lock-in period. Lock-in period has finished for them, so they have actually sold the shares in the market through a block deal. My sense is that I don't think the cash flows are at a level where you can actually make a buying decision on the company.
Mm-hmm.
It will be very difficult because other players like Bajaj Auto, TVS Motors have leaped quite far ahead as far as two-wheelers are concerned in the electric space.
Right.
So it's going to be a very uphill task for Ola to come back.
All right, Amit, and now let's talk about the big headline event, which is scheduled just 2 days from now. In fact, the RBI MPC kicks off its discussions from today, and we are hoping that we will get to hear some news on the 6th of June, which of course we'll be tracking for our viewers. But as far as inflation is concerned, I think inflation is now well below 4%. So there's no real surprise if RBI does go ahead and cut interest rates. In fact, that is something that seems to have been factored in already. But there are also reports by economists suggesting that perhaps the RBI should now go ahead with a bigger cut, and instead of a 25 basis point, look at a 50 basis point cut. Are you on board with that? Do you think it's time for RBI to just bite a bigger bullet this time around and go ahead with a 50 basis point cut in interest rates?
No, I think 25 basis point will be, status quo. That is pretty much expected. I don't think RBI is in a position to take big calls on the rate cuts, given the fact that US is on a status quo mode. They are not cutting rates because of what is happening on the tariff front. So to keep avoiding the FIA outflows, they'll probably cut slowly only. So 25 basis point in June this week, and then 25 basis point in August is more of a likely. Remember, US cut 100 basis point in the last quarter,
Yeah.
from September till December last year. So, and we have done two 25 basis point cuts. So we are at 50 basis points cut. So even if we do two slow cuts, we should be equal to what the Fed has cut. So I think the gap, the yield gap, would remain as it is. So I don't think that they are in a hurry to cut rates. Moreover, they are more concerned about transmission happening of the rate cuts to
And
by
that's
the
exactly
banks.
what doesn't happen, isn't it, Amit? I think that is something that we believe RBI should enforce, that the transmission happens quickly, because you look at the profitability of banks, I think they're making enough and more money to be able to transmit that rate cut to home loan buyers and any other EMIs on loans that people take from banks. But for some reason, we don't see the rate cut transmission happening as quickly as the rate hike transmission.
That is always the case. The rate hike transmission happens very quickly, and the rate cut transmission takes usually 3 to 6 months. Having said that, I think a little bit of transmission from the NBFC side has already started happening from April onwards. So we have seen certain home loans and certain consumption loans interest rates going down. So I think it's a process. It usually takes 3 to 6 months after the rate cut, respective rate cut, to reflect in the pockets of the
मैं
consumers.
सोच रहा हूँ
Uh, so I'm not too negative about that.
So that seems to be the view. Now, talk to us specifically, Amit, about the banking sector stocks also, because, again, every day we are seeing, sometimes we see HDFC is down without a news trigger, ICICI is down without a news trigger. On a day like today, we are seeing ICICI is down about 0.5%, HDFC is up about 0.3% or so. It doesn't really, seem to move in a particular direction. What are investors really doing with banking stocks right now? Are they just booking? Are they just looking at some value hunting? When prices are low, they're going ahead and buying and then profit booking later, because there's no news really in the banking sector which is showing such divergence on banking stocks today.
I mean, Bank Nifty has been up almost 30% from the March levels or even the April levels. So from 47, 48, it has already moved to 55, 56,000 levels. So most of the good news has already been priced in. Right now, it's in a broad range of 54,500 and 56,000. This range can stay a little bit more probably till the next quarterly results are coming in. So right now it's more of a a wait and watch kind of a situation where all the good things have already priced in and market is looking for the new fresh triggers. RBI policy and the liquidity which might come in. That would give a little bit of flip to it. Another thing would be the consumption boost which is given in the budget, which is given by these improved bank liquidity. That should reflect, into the bank's credit growth in the coming months.
All right, Amit Kumar Gupta, founder of Fintrekk Capital. Thank you so much for taking the time and being here with us this morning and putting all the action that you're seeing on the Lal Street in perspective.